Hey guys, it's February 23rd, and this is Crypto Ukrainian, and I would like to go over some things about today's New York session. You asked for it, so I'm going to explain to you how this works and how I was able to catch $711 in trades today. So this is our first initial volume balance of New York Open. So I'd like to capture first half an hour of the Open. Let's switch over to a 1-minute chart, and we're going to check something out. So as you see in the first half an hour, we were forming a initial volume balance here. So we went down, and then here, let me actually put the order flow here so you can see what actually happened here. Let me make these bubbles a little bit smaller. Let's go 5. All right. So let's take a look. So first we went up. You see a lot of sellers absorption right here. Then we started making the range going down. Then we got a whole bunch of sellers absorbed. Then we went up. We retested IBM. This was our middle of initial volume balance. Kind of retested it again. Got absorbed. Buyers got exhausted here, and we started. A whole bunch of sell orders came in. We kind of hovered here, and then once we stepped out, you could have entered somewhere around here. Another cue, you could enter it a little bit low. You can enter it a little bit before. You don't need this confirmation here. Is you can take a look at what happened here. So this is the volume of last day. So of the previous day. So as you can see, we're at value area low right here. So look what happened. We came out of value area low of previous day, right? We went back up. We went lower, and look what's happening here. Whole bunch of sellers at value area low, right? Look at again. Buyers came in, they got absorbed by sellers at initial value area low. So as soon as you see that we're struggling to get back into the range of a previous day, we can start catching that short, right? So it doesn't matter where you enter, right? All you need is a little bit of this move to make money. Like, you're not trying to get a couple of contracts here and drive all the way down. That would just be silly, right? Even with one micro contract, this is a good, $300 position at least. But if you trade with 2, 3, 4 micros, this is pretty insane. Let's take a look at another New York session right here. Actually, let me go 14 days. So I'll show you another one that was much harder to trade. Not every day you're supposed to trade, guys. So check this out. Don't worry about that volume profile. So here's what happened. We were sitting down below here, and a whole bunch of sellers tried to send the price down, but a whole bunch of buy orders start coming in within the initial volume balance. I have missed this trade, but if you're quick enough and you understand how this works, and I'll show you another thing on TradingView there, what happened there. But the whole candle was filled with buy orders, right? I was a little bit too short on the trigger. I could have entered this, and I could have gotten multiple ticks here. But other than that, we created this range. We stopped here. A whole bunch of sellers got absorbed. We went down, retested IBM. We could have entered here, right? But this is not a breakout trade. This is not an imbalanced trade as I like it, above or below the initial volume balance. But nonetheless, as soon as you saw that we're retesting this and this big green candle started going up, you could enter right here and potentially place your stop loss right at this bottom of this candle, which is more than I like to have, more risks than I like to have, depending on the daily profits. At that time that we were just starting, I didn't have any weekly profits yet, so I didn't want to risk the drawdown. And we kind of went up, but you see, like, we kept going back into initial volume balance, retested IBM again. Here's another entry for you guys, another very good entry. You could have rode this up again, placing the stop loss at the same place, below this candle right here. This is how you trade order flow, guys. That's pretty much it. We're gonna see what's gonna happen tomorrow. Oh yeah, I wanted to show you this as well. So this is my trading view. This is my trading view. Let me go to one second. Okay, so this is that second example I showed you, where you could have entered on the candles. So we didn't see that, right? So let's say our volume profile was right here, right, before this day started. So I'm referring to this right here. So let's take a look again at TradingView. Look what happened here. We were sitting at the bottom of the compressions value area low, and we start getting the orders up. As soon as we went through the POC violently, a lot of buy orders, we could have entered right here, placed a stop loss right at POC, and rode this up, right? So you want to try and map out all the compressions. I don't map it out on a task platform just because it takes too long to load, and you can only go 30 days back, for now at least. But as you can see, I have all the compression ranges mapped out. I have all the point of controls mapped out, so I know where the targets are. Well, I don't know, but I can assume that one of these things could be a rejection, or one of these things could be a target. As you see here, POC of this range on the 26th of February. Sorry, on the 26th of, on the 6th of February. And that POC look, we can't break it. It keeps getting touched, it keeps getting touched. We didn't even reach it today. But look at this, we're rejecting this compressions value area low, right? So it's a very good reference to play volume like that. Anyways, guys, that's all I wanted to show you. Crypto Ukrainian out. See you in the next video.